I want to start with a shocking statistic that really puts things into perspective. 90% of Americans have less than $1,000 in savings. What does this mean for our financial futures? As this statistic appears on screen, 90% of Americans have less than $1,000 in savings. I have to ask, are we setting ourselves up for financial success or failure? At WealthWise Daily, we've seen time and time again how a lack of savings can lead to financial stress and anxiety. I mean, think about it, having less than $1,000 in the bank means that even a small unexpected expense can be a major setback. We at WealthWise Daily believe that it's time to take control of our finances and start building the savings we need to secure our futures. So, let's dive in and explore some strategies for growing our savings and achieving financial freedom. Hello everyone, I'm Reid, and welcome to WealthWise Daily. I'm excited to share with you a topic that I think is really important for anyone looking to start building wealth, and that's how to start investing with just a little bit of money. Now, I know what you might be thinking, investing seems like something that's only for people with a lot of money, but I'm here to tell you that's just not true. At WealthWise Daily, we believe that anyone can start investing, regardless of their income level or financial situation. In this video, we're going to explore some of the key concepts that you need to know to get started, including index funds, which are a great way to diversify your portfolio and minimize risk. We'll also be talking about dollar cost averaging, which is a strategy that can help you smooth out the ups and downs of the market and avoid making emotional decisions based on short-term fluctuations. And of course, we'll be discussing the power of compound interest, which can help your investments grow exponentially over time. We'll also be covering the basics of brokerage accounts and how to set one up, even if you're starting with just a small amount of money. I think this is really important, because having a solid understanding of these concepts can make all the difference in your long-term financial success. So, if you're ready to start building wealth and securing your financial future, then keep watching, because we're about to dive in and explore how to start investing with just a little bit of money. You know, I've been in this industry long enough to see a common psychological barrier that holds people back from starting to invest, and that's the idea that they need thousands of dollars to get started. I've seen it time and time again, people thinking that they need a huge chunk of money to begin investing, but the truth is, that's just not the case. We at WealthWise Daily are always trying to break down these barriers and make investing more accessible to everyone. I mean, think about it, the concept of index funds, which is a huge part of what we talk about here, wasn't even around until Jack Bogle came along and founded Vanguard in the 1970s. He revolutionized the way people invest by making it possible for individuals to invest in the entire market, rather than trying to pick individual stocks. And now, with the advancement of technology, we have fractional shares, which means you can invest as little as a few dollars into the market. Now, let's talk about the power of compound interest. The S&P 500, which is often considered the benchmark for the overall market, has averaged a 10.5% annual return since 1957. That's a pretty impressive track record, and it's a big part of why I'm so passionate about investing. So, let's do some real math here. If you were to invest just $100 per month at a 10% annual return in 30 years, you'd have around $106,000. But here's the thing, even if you can only afford to invest $50 per month, that's still going to get you to around $53,000 in 30 years. And if you can only afford to invest $0 per month, well, that's still going to get you to around $6,000 in 30 years. I think it's really important to understand that investing is a long game, and it's not about how much you can invest, it's about starting early and being consistent. We at WealthWise Daily are always looking for ways to make investing more accessible and to help people understand that they don't need thousands of dollars to get started. So, don't let the idea that you need a lot of money hold you back, because the truth is, even small, regular investments can add up over time. I hope this helps to break down that psychological barrier and gets you started on your investing journey. Hello everyone, I'm Reid from WealthWise Daily, and welcome back to our channel. Today, we're going to walk through the process of opening your first investment account, and I'm excited to share this journey with you. The first step is to choose a broker, and I want to give you a rundown of some popular options. You've got Fidelity, Schwab, and Robinhood, each with their pros and cons. Fidelity and Schwab are more traditional brokers with a wide range of investment options, but they often come with higher fees. Robinhood, on the other hand, is a great option for beginners, with no commissions and a user-friendly interface. Now, I personally like to keep things simple, so I'll be using Robinhood as an example, but feel free to choose the one that works best for you. Once you've selected your broker, it's time to fund your account, and I recommend starting with $100. This amount will give you a chance to get familiar with the platform without breaking the bank. Next, we'll be buying your first ETF, and I'll explain what that means in a minute. We at WealthWise Daily often recommend VOO, VTI, or SCHB, as they're all solid options. VOO tracks the S&P 500, which means you'll be invested in the top 500 companies in the US. VTI, on the other hand, tracks the entire US stock market, giving you even more diversification. SCHB is similar to VTI but with a slightly different approach. All three are great choices, but I'll be using VOO as an example. Now that we've bought our first ETF, it's time to set up automatic monthly investments. This is where the concept of dollar cost averaging comes in, which means you'll be investing a fixed amount of money at regular intervals, regardless of the market's performance. This strategy helps reduce the impact of market volatility and timing risks. I recommend setting up a monthly investment of $100, which will be transferred from your bank account to your investment account. The key here is to be consistent and patient, and that's why I always say, never touch it. Once you've set up your automatic investments, it's essential to resist the temptation to withdraw your money or make impulsive decisions based on short-term market fluctuations. By following these steps and sticking to your plan, you'll be well on your way to building a solid investment portfolio, and we at WealthWise Daily will be here to guide you every step of the way. As I've been helping people navigate the world of finance here at WealthWise Daily, I've noticed that beginners often make the same mistakes over and over again, and I want to share those with you today. The first mistake I see is panic selling during dips in the market. I've seen it time and time again, where people get caught up in the fear of losing money and they sell their investments at the worst possible time. Let me give you an example. Back in 2020, when the COVID pandemic hit, the market dropped significantly, but if you had held on to your investments, you would have seen a 100% recovery in just 5 months. That's right, if you had stayed the course, you would have been back to where you started in less than half a year. Now, the second mistake I see beginners making is trying to pick individual stocks instead of investing in index funds. I get it, it can be tempting to try to find that one stock that's going to shoot up and make you a lot of money, but the truth is, it's just not a reliable way to invest. We at WealthWise Daily have done the research, and time again, it shows that index funds outperform individual stocks over the long term. For example, if you had invested in the S&P 500 index fund over the past 10 years, you would have seen an average annual return of around 13%, which is significantly higher than what most individual stocks have returned. The third mistake I see beginners making is waiting for the perfect moment to invest. I've talked to people who have been waiting for years for the perfect opportunity to put their money in the market, but the truth is, there is no perfect moment. What we know is that time in the market beats timing the market. If you had invested $10,000 in the S&P 500 index fund 10 years ago, it would be worth around $30,000 today, just from the power of compounding and the overall growth of the market. So, don't wait for the perfect moment, just get started and let time do the work for you. I've seen it time and time again, and I'm confident that if you can avoid these 3 mistakes, you'll be well on your way to achieving your financial goals. So, you're looking to take your finances to the next level, and I'm excited to share some advanced strategies with you. At this point, you're likely already maxing out your savings and investments, but I want to emphasize the importance of maximizing your $2,000 per month. One way to do this is by contributing to a Max Roth IRA, which has a $6,000 per year limit in 2026. I always recommend taking full advantage of this, as it's a great way to build wealth over time. Now, if your employer offers a 401k, I want to stress that you should always take the match. It's essentially free money. I know it can be tempting to skip out on this, but trust me, it's worth it in the long run. We at WealthWise Daily always say that getting free money from your employer is one of the easiest ways to boost your retirement savings. Another advanced strategy one want to touch on is tax loss harvesting. This is a technique where you sell securities that have declined in value to offset gains from other investments, which can help reduce your tax liability. It's a bit more complex, but essentially, you're using losses to balance out gains, and it can be a powerful tool in your investment arsenal. When it comes to rebalancing your portfolio, I always recommend doing it on a regular basis, whether that's quarterly or annually. This will help ensure that your investments remain aligned with your goals and risk tolerance. I like to think of it as a financial checkup. It's a chance to review your progress, make any necessary adjustments, and stay on track. As I always say, investing is a long-term game, and it's essential to be patient, disciplined, and informed. We at WealthWise Daily are committed to helping you achieve financial freedom, and I hope these practical tips have been helpful in taking your finances to the next level. This video is for educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions. Hey there, I want to take a moment to thank you for watching this video and for being part of the WealthWise Daily community. I'm glad you're here, and I hope you found the information helpful in making informed decisions about your finances. If you did enjoy this video, please take a second to like it, and if you haven't already, consider subscribing to our channel. We at WealthWise Daily are always working to bring you the most valuable insights and strategies. Also, don't forget to hit that notification bell, so you can stay up to date on all our latest content. I'm excited to share our next video with you, where we'll be diving into the truth about individual stocks versus index funds. It's a topic that's often debated, and I think you'll find our take on it really interesting. By joining us in the next video, you'll get a better understanding of which investment strategy might be the best fit for your portfolio. Thanks again for watching, and I look forward to seeing you in the next video.